Rohr here with an early global view on Tuesday, December 23rd, 2014. It's currently 6:15 a.m. U.S. Central Time, and this is our final blog post and video analysis for 2014. And we wish to thank all of our subscribers and clients and wish you a very happy Hanukkah, Merry Christmas, and all the best for a very happy and prosperous new year. Now, on the markets, look, the general macro technical tendency is back to risk on. So what does all this mean to the markets? Well, just again to revisit that FOMC influence, there was a key lead contract level, and of course that became very important into last Wednesday because the market had spent the first part of the week below 1,985. That was the old high from back in July and the more important level at the top of the old trading range from spring into summer. The secondary level that was important was the September high up in the 2013 area. And to once again review what happened last Wednesday, the market was firming, but was still below or right around 1985 in the March contract that was going to become lead contract on the expiration of the December contract on Thursday. And it was actually firming up in front of the FOMC on Wednesday. Once it saw the statement, essentially maintained the considerable time language. It pushed up right away to 2007. Janet Yellen upset it a bit by talking about holding the rates down at least for the next two meetings. Some people misinterpreted that to mean they could hike by late April, and she made it clear that wasn't likely. So we went from a $20 drop straight down over the course of an hour to getting the bid back late Wednesday, and then we all know what happened Thursday morning, not only above 2013, but above the next key historic area, right into the next key historic area, 2,036 to 40, that was ultimately exceeded by later on in the day. So what we've seen now is a push above the old high. That's this starting point. Full retracement on this Fibonacci is the 2,069.80 high of the March contract, going back into the early part of December, that it is exceeded, but the bigger resistance is up at 2,078.80. That was the lead contract, December contract high, going back in that same period. And if it should escape, the oscillator resistance extending out, topping line and oscillator resistance is 20.88 this week. Because this is our last, we're going to discuss a bit of what might happen in the next week. And that's been coming up about $5 a week, and you'll see it's 2,093 in the next week.